Okay, let's go ahead and get started. Hello, I'm Kate Rogers. I'm the Director of Strategic Initiatives for NEOGOV, and I want to welcome you to the Quiet Crisis, using student loan forgiveness to attract public sector candidates. But before we get started, I have just a couple of housekeeping items. If you look to the right of your screen, you'll see a panel where you're able to add in questions or comments throughout the webinar. We will take some time for questions at the end, but you can enter your questions at any time. You can also use the audio drop-down box and select computer or phone audio for the call-in details if you need them. I also want to let you know that tomorrow you'll be receiving an email with a link to the recording of this presentation, as well as a copy of the presentation slides. And if you have any questions after the webinar, you can always reach out to us at contact@neogov.com. Now, I'd like to take just a moment to introduce our panelists for today. Michelle Klein is the director of our recruit product for NEOGOV. And Michelle has been with us for 18 years, but prior to joining NEOGOV, she held multiple positions at the City of Eugene and Portland Metro within their HR department. At the City of Eugene, she managed the Human Resources Information System, HRIS as we like to call it, and participated in the design and testing of systems. This, combined with her time with us, has given her an extensive background in both talent management and SaaS HR solutions. And we're delighted to welcome Will Seeley with us from Summer. He is the co-founder and CEO of Summer. And as a student loan borrower and a former student loan policy expert at the Consumer Financial Protection Bureau, Will has actually devoted his life to fixing the broken student loan system in the US. He has served as policy advisor to Senator Elizabeth Warren, as well as working in the first term of the Obama administration. So you can see that we have two very knowledgeable people to help us through looking at the quiet crisis in public sector hiring. So I'm going to turn it over to Michelle now to start us off talking about what we know about this quiet crisis.
Thank you, Kate. I'm excited to be here with Will today to talk with you about this. As it's probably no surprise to all of you on this call, hiring has become more difficult than ever. And NEOGOV is in a unique position in that we have over 2,000 government and education organizations that are using our software for recruiting. And that provides us with access to a large data set to be able to analyze hiring trends across the country within the government and education sectors. And we've been looking at some of these trends over the past couple of years and have some interesting information that I'm going to be sharing with you. Let's see what this data is telling us. For the 12 months ending in June 2021 to the year ending in June 2022, the number of public sector job postings has gone up by 41%. And yet the number of applications per open job during that same period has gone down by 30%. These are pretty staggering numbers. Let's take a little bit deeper look at it. When we look at the number of views for each job posting that they've received since 2020, we can see that there's been a drop of 24% between 2020 and 2022. Fewer people are viewing the job postings. And then add to that, we're seeing lower conversion rates of the number of job seekers that view the job postings and then submit their application. That conversion rate has dropped from 2.4% in 2020 to 1.7% in 2022. So fewer people are viewing job postings, and then of those who do, an even smaller number are actually submitting an application. And the result of that is that we're seeing a significant drop in the overall number of applicants per job. And on average, that number has gone from 43 applicants in 2020 to 23 applicants per job in 2022. It gets even more shocking when you look at the data by quartile. So if we go to the next slide, we go to the data by quartile. We broke the data into quartiles based on the number of applications per job. The jobs that get the least applicants are in the first quartile, and the ones that get the most are in the last quartile. And what we see when we look at that data tells us that half of our jobs are only getting an average of 5 applications per job. And that makes it exceedingly difficult to find good talent in our organizations. The number of applicants per job in the public sector has been dropping consistently for a number of years, but this drop has gotten really dramatic in the past year. And we wanted to know why, so we decided to ask job seekers and HR directors to get answers. A few months ago, NEOGOV conducted a survey of public employers on hiring trends. And what they told us in the survey is right in line with what this data that I've just shared with you, what that data would suggest. What they told us, 80% of them said that the number of job openings is higher than on an average year. Half of those respondents said it was the highest number of job openings they'd seen in recent memory. And 79% of agencies cannot find enough qualified candidates. We also asked the employers what the impact was of hiring challenges that they've had on their organizations. So if we go to next slide. As agencies are struggling to find qualified candidates to fill their positions, it's putting more pressure on existing staff. 82% said it's resulted in staff burnout. 64% say it's resulted in increased overtime. 31% it's resulted in more shared services or shared employees. And 20% have said that they've had to reduce the services to their citizens. All of these factors have really hit public sector particularly hard. Okay, next slide. We also conducted a survey of job seekers. They shared that benefits package and the opportunity to do meaningful work outweighed salary and stability when they consider a career in the public sector. 65% said that benefits were a primary reason to work in the public sector. So all of these stats I've shown you are pretty dismal, and I don't want to leave you with the impression that there's just this horrible doom and gloom and there's nothing you can do about it. There are a lot of things that you can do about it, and one of them is focusing on the benefits that your public sector organization or educational institution can offer. Since benefits are one of the organization's ways that you can compete with the private sector for job applicants, we've brought in Will Steely, who is the CEO of Summer. He is going to be sharing how student loan forgiveness can be a valuable tool in recruiting in your recruiting process. Summer was started by student loan borrowers who wanted to help others navigate the student loan repayment landscape. We have a number of our customers who are already working with Summers. And as a NEOGOV partner, they are a trusted advisor that can help you and your employees navigate their student loan debt. So I'm going to hand it over to Will now. Go ahead, Will.
Thanks so much, Michelle. I really appreciate the warm intro. And it's a pleasure to speak with you all today about what we're doing to help government employers navigate public service loan forgiveness and other loan assistance programs for your employees who are certainly eligible but need help navigating through the process. So taking a step back, I'll just quickly introduce myself a little bit further. I am the founder and CEO of Summer. We started Summer almost 6 years ago after my experience of working in the federal government for a number of years, helping federal agencies set up their public service loan forgiveness programs for their employees and seeing firsthand just how difficult it was to navigate what has unfortunately been a very confusing program for both employees and employers who are required to submit a form with the employee's assistance to verify their eligibility for that program. So having done that in Washington, D.C., spending years seeing exactly all of the pain points where HR teams were struggling to navigate the program, giving people the education and awareness that they wanted to give, but struggled to keep track of all the loose ends, the game of chutes and ladders, and keeping track of all the student loan information. I realized that there was an opportunity to help not just federal agencies, but local city and state municipalities, and go as broad as national and try to help as many folks as possible. So now at Summer, we have set up our mission to provide the best possible service to employers and their employees with respect to ensuring financial freedom for employees with the respect to student loan assistance. And we've helped over 100,000 student loan borrowers to date. We've worked with dozens of different municipalities, counties, and state governments. And we have seen a lot of success in helping enroll thousands and thousands of borrowers, saving millions and millions of dollars on their student loans cumulatively, We're on track to achieve $1 billion of student loan savings cumulatively, which is a remarkable achievement and something the team celebrates as the impact that we're making here and every day. Just next slide, and we'll go a little bit into how we're doing that. Great. So Summer provides a suite of software solutions for employers and employees with respect to student loan navigation. One of the first things that we did early on was we set up the first ever digital enrollment tool for public service loan forgiveness. Now, taking a step back, I think it's important to explain why that is of value. Many of you who work in HR for different municipalities, counties, and state governments may realize that PSLF, you've probably experienced firsthand, it's no cakewalk, it's not easy. Employees come with loads of questions about their unique situation. There are many different types of loans. There are federal loans, there are private loans. There's almost a dozen different types of loans among them. There are variable interest rate, fixed interest rate. There are parent loans for children that you can borrow from the federal government. There are loans you borrow in your own name. We see all shapes and sizes. When borrowers and your employees have those various situations, there's unfortunately rarely a one-size-fits-all situation. When we talk to employees, and we've talked to employers as well, we hear a lot of comparisons about navigating student loan assistance to filing your taxes. And it goes sort of like this. I'll just quote Janine, one borrower, who said, "I have struggled time and time again to understand why my more than 24 loans don't all qualify for public service loan forgiveness. And I've had to apply multiple times for multiple different loan types. And I feel like I've been hitting my head against the wall, trying to get eligibility to programs that I know I should be able to enroll in." So that borrower experience we found is quite universal. A lot of folks struggle to understand which loans qualify, which do not. And the challenge is that it's not just one form. Borrowers have to submit a PSLF form for every year of eligibility working for either a 501c3 or a government institution. And they have to ensure that they also are enrolled in a program called income-driven repayment, which lowers their monthly payments and thus maximizes their savings after 10 years or 120 months of eligible employment. Not only that, but as we all know, employees can go from job to job to job, and then they require different signatures from different HR teams. And borrowers with older loan types require what is known as government loan consolidation. And loan consolidation requires an additional form to convert older loan types into newer loan types that are eligible for the program. Unfortunately, for all of these reasons, approximately 98% of borrowers were previously rejected for public service loan forgiveness when applying. There was lower than a 2% acceptance rate, and some people said, "I can't believe it's harder to get into this program than it is to get into Harvard." The reality is a lot of borrowers were applying with all kinds of different issues with their applications, and the federal system is quite rigid in terms of its approval. And so what we saw was time and time again, borrowers were applying with the wrong loan type. They hadn't consolidated their older loans into newer loans, and as a result, were getting rejected. That was a very common reason that affected almost 30% of applicants for why they were rejected. In addition to that, we've seen all kinds of tricks and traps along the way that you would never even know and would frankly be, frustrated in, as we are, that some borrowers were rejected, for example, for having slashes instead of dashes in the date of their signature line. And the system that the government uses to read the applications were rejecting those applications, and the borrowers were simply told they were rejected without being told why. So people thought they were not eligible when it was like a gotcha, silly formatting issue. And thousands of people just said, well, I guess I can't get into this program. And so what we found to be the case is by creating a smart software solution that makes sure that there's never, the wrong formatting issue, that makes sure that we detect the loan file, that makes sure that each individual applies with the right eligibility criteria, that we have been likened to a TurboTax for student loan submission. And again, that is how we've been able to achieve the results that I shared at the top of my intro, and why we find this is so helpful. In terms of being the first ever online enrollment tool, you have to remember, because this requires borrower information or an employee's information that then gets sent to you as the HR representative of the organization to review and sign, and then it has to go back to the borrower. We've heard from countless clients that we serve just the headache that is created of paper-based forms, multiple forms per employee, being faxed back and forth, sometimes during this COVID pandemic, remotely from a fax machine, and the headache there and the likelihood of mistakes goes up dramatically. And so the number one thing that we want to communicate with you is that Summer helps the employer as much as it helps the employee. We provide the system and the structure and the infrastructure for you to complete this process as headache-free as is possible. And we have a dedicated support staff that works one-on-one with every client to ensure you answer every question that you need answered, that we guide you, that you're learning from the lessons of past employers that we can bring to you at your fingertips, and that whenever there's a tough question from an employee, you get that service provided. So jump to the next slide and we'll go a little bit more into detail about what that looks like in real time. As I mentioned, the value to human resources in the HR team as well as employees. So 3 things that we provide for every single client we work with. 1, we provide a low-cost student loan benefit that offers high impact. People are often surprised about how affordable our product is, and we do this because we're here with a social mission to help people navigate something that's dedicated to helping people. And so we provide this at a way that you can afford, that is within your budget for employee benefits, that does not break the bank. And the ROI is phenomenal. We're saving borrowers, and I'll go into this in more detail, tens of thousands of dollars on average. One client, we're saving close to over $100,000 on average for their employees. So the ROI on the average employer is close to $500 that goes towards your employee for every dollar you spend on Summer. And that for all of our clients has been the number one thing that they are able to celebrate as a great investment for their employees and a great use of their budget. 2, no more complex and confusing paperwork with everything being digitized. Of course, for some employers, you may still need to verify an employee's date of employment. We can work with you on that and create bespoke solutions where we're connected and plugged in and helping you with that as a digital solution going forward. But that is something that we have fully digitized from the paperwork processing standpoint. 3rd value, the timely benefit. So you all are probably aware that public service loan forgiveness has an additional limited waiver that has been added through the end of next month, October 31st, 2022. The exciting thing about this is about 15% of your employees on average now have access to be able to get almost instantaneous loan forgiveness on their federal student loans, again, as high as over $100,000 on average. And that is a value that you can provide to your employees. One client told us this is an incredible recruiting and retention tool. And Michelle gave some information earlier about the challenges that government employers are facing in terms of recruiting and seeing dips in the number of applicants. Having worked in the federal government and previously working in a nonprofit, I certainly know the challenges of, while you're helping get public service and you're doing it for the mission, many government employers and nonprofits struggle to provide the salaries that private sector employers can provide. And so the benefits really come down to trying to level the playing field, help you as an employer increase the number of applicants and recruits to ensure that everyone is able to apply and not be as concerned about the wage differential, so that you can get the best possible talent in the door, which we all care about. Public service loan forgiveness is a gift in that regard to you as an employer. It is a government program that allows your employees to reduce their biggest cost center. The average borrower has close to $45,000, but among our clients in the government, we see that there are a number of second degree earners with PhDs or a master's degree, and they have a higher debt load than the national average. We see something closer to $70,000 to $80,000 of student debt. When that gets fully canceled under public service loan forgiveness, that is on average over a year's salary put back in the pocket of your employees. If you help them through that process, the hero moment you provide is profound. There's not another benefit on the planet that hands people $80,000. Nothing like it. And if you can ensure that your employees get access to that without headache, you will see boosted retention. And if you work that into your recruiting processes, we've been helping our clients do so, we see that the applicant pool increases, and there are a lot of young graduates with a lot of student debt. And despite Biden's loan cancellation initiative recently announced, it's doing nothing for recent graduates who are still leaving school with tons and tons of debt. And they're looking for programs like loan assistance and support with canceling their loans, so that they don't have to make tough decisions with their finances that so many young people are having to do right now. In terms of employees, we'll just go through this quickly because I covered a lot of this earlier. Digital enrollment, not just into public service loan forgiveness, but we're assisting borrowers with the new Biden cancellation announcement that will be coming out over the coming weeks. We also help people with over 100 different federal and state loan assistance programs, including income-driven repayment, teachers loan forgiveness, nurses loan forgiveness, and all types of other programs. Short and long-term savings are provided to your employees because not only do they get that big pot of savings when their loans are eventually canceled in public service loan forgiveness and it's canceled tax-free, by enrolling them in income-driven repayment, we're saving individuals who are on track for loan forgiveness, maybe in 1 year, 2 years, 3 years out. Those individuals are benefiting by enrolling in income-driven repayment before the cancellation event, which reduces their student loan monthly payments by over $300 on average. That's close to $4,000 a year. I think we all remember the COVID relief effort at the beginning of the pandemic, where people were getting checks for $3,000, and the life-changing impact that had for many different people around the country. This is that amount every single year for 10 years before your loans are fully canceled at the end of the 10-year mark, which is how public service loan forgiveness works. You need that 120 months or 10 years of qualifying payments towards your student loans, and then the loans are canceled after that milestone. And again, that's the retention part. You have to stay employed for those 10 years for a qualifying employer. And so we see employers are now positioning PSLF as this benefit and seeing that 10-year retention benefit to their younger employees and employees who have student loans. Summer is a free benefit for all employees. There's no cost to the employee. We work with employers to cover that cost. Again, as I noted, it is a low cost, but that makes it exactly what employees are looking for to navigate this process. Next slide. So I'll just wrap by providing a case study to describe how one of our clients has leveraged Summer and our software solution for their own internal HR filing, as well as for their employees. So over a year ago, we started working with the city of Alexandria in Virginia, one of the largest cities in the state of Virginia. They're one of a dozen government clients that we work with, and they have found Summer to be an incredibly high impact financial well-being benefit for their employees. Dr. Grace Ingham, who has a PhD, has said using public service loan forgiveness in the nonprofit sector and government sector is an attraction and retention tool, and that is everything for their organization. They've saved a whopping $114,000 in loan forgiveness for their employees, with an average of $317 of monthly savings. One of the things that we recently were talking about with them is that the impact of the Biden loan cancellation initiative that was recently announced has just been estimated to save about $300 to $400 billion, but there's $1.7 trillion of student debt left outstanding. What does that mean? It means that only 20% of all outstanding student debt will potentially be canceled by this new initiative, leaving 80% of debt remaining for the majority of borrowers. So Dr. Grace Ingham has said to us that long after the hubbubaloo, the big celebration by borrowers, they will be left with 80% of their student debt, and they will be looking to their HR, they will be looking to their employer for further guidance on how they can tackle the remaining 80% of your student debt. So if you have $100,000 of student loans, after the Biden initiative, you will have $80,000 or $90,000, depending on whether you qualify for $10,000 or $20,000 of loan cancellation. I don't know about you, but if I go from $100,000 to $90,000 of student debt, I'm scratching my head about what comes next. And that is where working with Summer can provide not just the software solution to enroll in programs like income-driven repayment and PSLF, public service loan forgiveness, but in addition to our software, we also have a team of dedicated, trained student loan experts that help provide the financial guidance that your employees need in terms of planning so they can get on the path to financial well-being. And that is the additional human support that is provided to guide them through that process, ensure they get the cancellation they deserve, and they create a plan to becoming on the path to debt-free. Thanks so much. Next slide, please. Time for Q&A.
Yeah, thanks, Will. Obviously, I'll just kick us off with the first question. So obviously, this is a great financial benefit and really cost-effective. What other impacts are organizations seeing, those that are implementing this kind of program? What kind of impacts are they seeing in their organizations?
That's a great question, Michelle. As I think about my answer, I'll go to a few of the clients we work with, Toledo, Ohio, as well as a few state governments that we've worked with in Connecticut and Pennsylvania. One of the things that we've heard is it's actually surprising the level of student debt in terms of stress on an employee. And we think of it often as financial stress, but it's actually emotional stress. It's draining. And when we've interviewed borrowers about that stress, what we've found is they say, it actually keeps me from being my best self and showing up as my full self to work. That the stress actually makes me nervous to be able to really focus. And so when we've helped employees relieve the financial burden of student debt, not only are they telling us that they're now qualifying for a mortgage for the first time in their life, an important financial milestone for many families, they're able to buy a car or a second car, which can help with a husband and wife or two spouses who need to be able to commute, but that they also are saving for retirement for the first time in a long time and taking advantage of their employer match in a way that they weren't able to before because that money needed to go to their loan payment. And to then have all of that from one action of student loan cancellation, that stress relief makes them so much more focused on their job and more effective in the workplace because they're not coming to work stressed about money and driving home stressed about money. They're actually feeling a financial weight lifted from their shoulders.
That's a really good point. Before I hand it over to Kate, there's one thing I want to bring up, and that is that one of the approaches that NEOGOV recommends is to really focus on developing your brand to clearly differentiate yourself from the public sector, especially in today's climate where it's very much a job seekers market. It's important to demonstrate that your organization is going to be a place that a prospective employee would be happy, where they would thrive. And factoring in student loan forgiveness is really a valuable part of what you can present in your organization's brand as far as all of your recruitment marketing materials. You can really help get more candidates applying when they see that you're an organization that's going to help them in this area. So I really want to encourage all of you, getting involved in doing this to make sure that you're marketing this as part of what you do in all of your recruitment marketing efforts. Kate, I'll hand it off to you.
So we do have some questions from our audience, and for those of you listening in, at any time you can add a question and our panelists will be here to answer. So the first question is, what is the cost for an organization to add this benefit? And is it based on the number of employees employed at the institutions or only those that have student loan debt?
That's a great question, Kate. So we use a PEPA model per employee per month. It's very reasonably priced. It is a point solution type pricing. So we have it on the lower end of the pricing curve. It is tiered based on the number of employees. So instead of listing out all of that, what I can say is if anyone's interested, they can reach out to us. I will say that the average employer pays in the vicinity of $1 to $1.50 on a per employee per month basis, and that we end up seeing an average around 40 to 50% of employees qualify for this benefit because we also offer this not just for the individual employee, but also their family. And you'd be amazed at how many of your employees have a significant other, either a dependent or a spouse that has student debt and affects the household. And that household burden is inevitably weighing on the employee as well. And so we really are able to achieve quite a big impact. We do see, just in terms of engagement, phenomenally high engagement numbers. Close to 20% of employees take advantage of this program. Whether or not they end up applying, some employees find out they simply do not qualify. Even those employees are grateful for finally getting the clarity they needed to understand what they do and do not qualify for and can still make a plan regardless.
And this is in response to something you said about the timelines. The current generation of job seekers seems to be less interested in staying with the company 10 years. Is there any word on the reduction of that timeline?
In terms of the public service loan forgiveness timeline, I can say it is 10 years, though we've heard from the Biden administration a proposal to shorten the timeline. The president himself has said that he thinks personally it should be 5 years to get loan cancellation, that you don't have to wait 10 years. That said, there is no policy in place currently to actually change the timeline requirement. So we operate under the belief that it's 10 years and it will continue to be a 10-year requirement. Millennials and younger generation, Gen Z, notoriously are jumping from job to job more so than older generations, prior generations. And it looks like that trend is here to stay. That said, public service loan forgiveness does change the behaviors of younger people because they really are looking to knock out that $50,000 to $100,000 debt load, and they don't want to change jobs to risk the possibility of losing eligibility. So they could go from a nonprofit to a government entity and back to a nonprofit and maybe even back to a government entity and still qualify, but it is certainly far more limiting than jumping around between the public and private sector. And the impact of that from an employer standpoint is when compared as an A/B test, people enrolled in public service loan forgiveness have longer tenures than employees who are not. And we think that that data is the most telling as to the longevity and retention that PSLF is providing for young people.
So follow-on question, is it 10 years at the same employer, or is it 10 years at any public employer?
It's 10 years at any qualifying employer, which is a 501c3, a small selection of 501c organizations, and obviously any government employer. It doesn't matter what position you hold within that entity, as long as your paycheck is paid by a qualifying employer. One client said, whether you're the principal or you're, kitchen staff, or you are a janitor in a school system, if you have a student loan and you are paid by the school district, or you are paid by the state government or the municipal government, you will be eligible for public service loan forgiveness. And that is something that, if you have a parent loan and you are a parent paying for your child's loan, but you took on the parent loan and you work for a public entity qualifying employer, you can get that loan canceled if it's a parent loan. If it's the student's loan taken out in their name, that loan will not qualify if the parent is the one who works for the government. If it's the student who took out the loan in their name and they work for you, it will qualify for them. That's just one of many examples as to why this gets so confusing. And that is one of the examples of things that we provide guidance on for every client that we assist.
How do localities, government organizations, how do they market this?
Right.
And probably both of you may have a comment on this.
Michelle, I'll let you jump in. I've obviously been doing a little bit of the talking recently.
Sure. I would say this is true about anything that's a benefit to your organization. How do you market that to your job seekers? And I would say it's all about the way you brand your organization, what you put on your website, what you put in flyers that you have, what you put up in signage and announcements and in communications that you have at job fairs and so on. What you put in communications that you send out via email to advertise it, what you put in social media. So I would say promote that as something that your organization is doing. If you're offering this benefit, make sure you're, put that out there to remind people that this public service loan forgiveness is available, and that this student loan assistance program is something that you offer as well, so that they're seeing that in any of the kinds of marketing materials that you have.
Michelle, that's great advice. I was previously talking to the head of HR at the University of California school system, the UC school system. They have over 400,000 employees. And I said, we were talking because we've partnered with large entities like Fidelity. We've partnered with Intuit and Credit Karma. We work with some very big organizations and support hundreds of thousands of employees across. And when we're working with them, I was talking to the head of HR from that organization. I said, what have you done on public service loan forgiveness? And she said, we don't want to touch it with a 10-foot pole. And I said, what do you mean? And she said, well, to be honest, it's incredibly messy. It's very hard. It's confusing. And honestly, we've actually tried to not promote it to intensely, because we're worried about the flood of applications and all of the questions and the uncertainty. And to be honest, no one's trained us. The government hasn't reached out. They're not providing the support we need. They just placed the burden on us. And I really felt for her. And we're now working with them. They're very likely to become a client as a result of needing a dedicated support system and a framework. And when we've been talking to them, they said awareness now isn't scary. Promoting PSLF is no longer scary. It feels like they're getting the tools and the resources that they're going to need to navigate this. The other thing I'll say is, many of you who are on the call might say, well, the PSLF waiver is all I'm hearing about. And I hear that the deadline ends on October 31st. So are we going to be able to get this in play? Are we going to help the people before October 31st? And I will say, we have the ability to get you from start to finish in under a week. We have the ability, we have a dedicated support staff, we have a kit that gives you everything out of the box. Our team will work with you step by step with all of the marketing materials, all of the information, the FAQs. Any questions that come in can be directed to our team. We have the size and ability to accommodate many, many different organizations and their many employees. So if you're worried about timing, we can move incredibly quickly to get this set up for you. I will say, from the original question that Kate was mentioning is, but what happens after October 31st? One of the things that we hear a lot from our clients is, hey, we recognize that PSLF isn't going away. The waiver is helping everyone who's been in repayment for over 10 years get the loan forgiveness they deserve. But there's about 85% of employees who are 9 years towards their 10-year forgiveness mark, who are at year 7 towards their 10-year forgiveness mark, and they need help too. And so a lot of the employers that we're working with have said, we want to help people today get the impact to maximize those who need to take advantage of the waiver, but we want to routinize this into our recruiting and onboarding system so that every new employee is told PSLF eligibility, let's get you to fill out the form, let's get this systematized so that these headaches don't happen down the line for all of your other employees that are coming in that need to get PSLF assistance in the future. So that's something, when you think about promoting this, if you're going heavy on everyone has to apply before October 31st, and then that begs the question, well, what comes after? Recognize a lot comes after. There's many, many more people who are going to need help after October 31st. So we are working with every one of our clients to balance that messaging, getting people who need the help for the waiver ASAP, and making sure we have a long-term plan in place for everyone who the waiver does not apply to.
Great. One last question, and if we didn't get to everybody's questions, we will follow up. Can you backdate a PSLF form to the date the employee started?
Yes, so every PSLF form, if I'm understanding the question correctly, every PSLF form has a start date and an end date, which could also be, still employed, for every employee that needs a PSLF certification filled out. For those applying for the PSLF waiver, you can obviously mark the date that a prior employee who's since left the organization, you will fill out those forms, and Summer can help you with that. Fill out the forms of a prior employee, or fill out the form for a current employee and backdate, to the date that they started at the organization. And then if they have an end date, you mark it as their end date in your system, or if they're still employed, you can just write still employed, and there's a checkbox there. All of that we've digitized and simplified in our system. And I will say, again, if an employee has worked for you over multiple years but has left the organization and come back, that will require at least 2 forms there as well. So we can assist with all of that. And I think this is the last question, so I'll say, if anyone does want to reach out to us to learn more about our offering and how we can help you and your employees, I'll give you my personal email. It's will@meetsummer.org. That's will@meetsummer.org, meetsummer.org.
Okay. Thank you so much, Will, and thank you for to Michelle as well for walking us through this quiet crisis, what we're seeing in public sector employment, and then how we can utilize this program to really increase the number of candidates as well as the retention of current employees. So thank you to those of you that have joined us today. We really appreciate your time. As we said at the beginning, we are recording this and we will send out an email with the recording, with the slides, as well as information on how to contact NEOGOV and Summer for any other questions. Thank you so much for joining us, and we look forward to you joining us for our next webinar. Take care. Bye.
Thank you, Kate.
Bye.
Thanks, Michelle.